Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by Austral Asset Management. I'm Brian Fernandez and it's Wednesday, the 1st of February, and we have Craig Erlam. He's a senior market analyst from Oanda, coming out to us from the UK. Craig, as always, great to have you on the show.
Thanks for having me on.
Now, Craig, before we get your insights, we're going to take a look at how the numbers stack up across the Asia-Pacific region, and then we'll start with however, cryptocurrencies. Now, Bitcoin is at 23,125. It's up 1.17%. Ethereum is at 1,583. It's up 0.67%. Now, if we look at regional equity markets, the SGX is now up. It's down 0.17%. Sorry. The KLCI is down 0.93%. Shanghai is up 0.11%. The ASX All Ordinaries is up 0.28%. The Nikkei is up 0.03%. The Hang Seng is up 0.38%. And rounding up the numbers, we've got the Kospi, which is up also 0.38%. Now, Craig, tell us why perhaps the markets are trading a little bit cautiously.
Yeah, I mean, we've got so much event risk now between now and the end of the week. Quite often we see that the event risk is back-ended towards Wednesday, Thursday, Friday. And I think very rarely is it as true as it is this week. We've got the Fed later on today. That's obviously the kind of highlight of the week. We think that the Fed's going to raise by 25 basis points, but it's not just about that. It's about what signals they're going to send for future rate hikes, because up until this point, they've been very hawkish, but a lot of the data now justifies a much more cautious approach, and even maybe a meeting-by-meeting approach. This could potentially even be the last interest rate hike, but we'll only learn that from the statement itself in terms of how the policymakers perceive it. And also, we see earnings go into a higher gear this evening as well. We've got Meta reporting, but then also Apple, Amazon, and others from tomorrow. So the real big tech names starting to come to the fore in earnings season as well. And even then going into the end of the week, you've got the European Central Bank, the Bank of England, and others. And then on Friday, the US jobs report. That's an enormous amount of event risk over the course of 3 days. So it's no surprise, really, that the markets have been quite choppy at the start of the week after what has been ultimately a fantastic start to the year.
Now, Craig, one of the things that has stood out also is cryptocurrencies. Bitcoin and Ethereum have run up significantly since the start of the year in particular. What's your take on cryptocurrencies, where the support looking like it's having, because it's had a very upward trajectory from around the 16,000 mark, now just above the 23,000 mark?
It's had a fantastic month so far. There's no doubt about that. I think there's a bit of a catch-up trade taking place, to be honest. If we look back to the period when equity markets first started to rebound strongly and risk appetite started to improve considerably on the back of inflation data and other data starting to move more in the direction we needed to see, we actually saw cryptos miss out on that largely because it happened around the same time as the FTX collapse started to materialize and unfold at such a rapid rate. The calm that we've seen in the aftermath of that and the lack of contagion to a great extent to what could have been and what was being the fear that was being priced into cryptocurrency markets really held at the time we saw that hold cryptos back. Now we've seen another risk appetite surge at the start of this year, equity markets, etc., performing really well. And I think the silence that we've seen, to the relative silence that we've seen in cryptos, the lack of further contagion, etc., has really benefited cryptos. It means that they've been able to take part in the risk rebound and maybe to a larger extent because it missed out on that earlier move as well. Of course, we're still going to see plenty of volatility here. There is still potential that we could see further fallout from the FTX, or we could see other scandals materialize, but I think what we've seen is investors have given it a bit of a wide berth for the initial month or so in the aftermath of that, and by hearing nothing overly scary, they felt that they can re-enter back into this market and do so with some confidence. And I think you can see that not just by the incredible gains that we've seen since the start of the year, but the fact that it's held on to those gains. We haven't seen much of a corrective move, and I think that's just as promising as the initial move itself.
Now, finally, I want to ask you about oil markets. Oil markets, there are oil bulls out there. Are you a bull, an oil bull or an oil bear?
I think at this point in time, I think especially going over the course of this year, it's hard not to be a little bit bullish here, and the reason is that we have seen signs that the US may achieve that soft landing that the Federal Reserve has craved, and that at times has looked unlikely. We've now seen signs that the euro area could avoid a recession altogether as well, and that's really encouraging thanks to a relatively mild winter and therefore lower energy prices because stores have remained high. We've even seen the UK avoid a recession at the end of last year, which was largely unexpected. And then the China transition, the COVID transitions moved much more positively in terms of the economic disruption that many have feared. And of course, we'll have to wait and see a lot more data on all of these things before we can become overly confident. But if we continue to see this occur in the way that it has so far over the course of the last month, what this ultimately means is we're going to see a lot more demand. And if we do see a lot more demand, then we will see prices being well supported. There are other factors which can continue to play into this, the role of OPEC Plus, and we'll see what the committee thinks today in terms of recommendations for outputs for the coming months. But what's important here is the demand side element in terms of how tight this market's going to be. And if we do see strong demand as a result of the economy performing better and China rebounding much more strongly and earlier than some had considered, then I think that has to be supportive for the price ultimately. And that, as well as, of course, the fact that the US is continuing to refill its SPR, and that creates additional demand as well.
As always, Craig, thanks for having on the show. Thanks for your insights.
Thank you.
Now, we've been speaking to Craig Erlam. He's the Senior Market Analyst at Oanda on BizTech's Asian Midday Market Watch, powered by Austral Asset Management. This show will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.